In this previous session, what we have discussed is who has to file GSTR-9, what is GSTR-9, basics of GST again, then what is turnover, what is late fee, what is due date, what are the tables of GSTR-9. In this session, we are discussing how do we fill all the tables in GSTR-9. Table wise explanation. I will go very slow. If there is any doubt, you also slow me down. If there is any doubt, you can post your questions on comment section. Any number of questions we are ready to take. Please post it on your comment section and let us know. So now out of the first three table, basic details table, 1, 2, 3, all details are auto populated. We are not filling anything. It is your name, financial year, GST number, legal name, trade name, ARN and date of filling. 1, 2, 3. 3 has 4 subparts. So all together comes automatically, no manual work to be done. Table 4 is related to your outward supplies on which tax is to be paid. See, I have people here who can answer this. So what will be included in table 4? Based on our previous discussion, we'll just discuss what is included in GSTR, table 4 of GSTR-9.
All your outward supplies,
Outward supplies,
exports,
SEZ. Same thing is included in 5 also, no?
But table 4,
Table
the
4
outward supplies on which
tax is paid. So table 4 is applicable when you have paid tax or declared and paid tax. Table 5 is applicable where it is not at all taxed, like export under LUT, exempt, nil rated, non-GST, all those things. Now table 4, first A. Table 4 we have many sub columns. Out of that, first is B2C. Whenever we are selling a good or service to an unregistered person, it is called a B2C transaction. This is total of all B2C in a year reduced by credit note or increased by debit note. Net of debit note and credit note we have to fill in 4A. B2C transactions of 2022-23 declared and paid in GSTR 1 and 3B of 2022-23, reduced by credit note and debit note of the year. Should I repeat? No. 4B is related to B2B transaction. Here we are filling all, write down very carefully, all GST related transaction, B2B sales that we have declared in GSTR1, filed under, declared in GSTR1 and filed, and paid tax in GSTR3B, that we are declaring here. This is not net of credit notes, this is pure amount, full amount. B2C was reduced by credit note. B2B is full amount, which is not reduced by credit note. I am repeating again, B2C we were reducing, say B2C sale was 100, credit note of 10, we would have declared 19 B2C column. Similarly, if it is B2B, we will show 100 as sale, and in the next table down there, we will show it as credit note related to that sale, because the table is designed that way. So 4A was B2C, 4B was B2B. Then we have 4C, which is zero rated supply, which includes export, which shall not include SEZ sales. So this is only where you have not availed LUT from the government and have paid IGST on your supply. Export supply can be done two ways. One is by taking LUT from the government, that is letter of undertaking, where you say you will pay the tax if it is determined. Then the other way is you will pay IGST and then claim refund. If you have opted the second route, that is paying IGST and getting the refund, then it comes in 4C. Again, for the financial year 22-23, declared in GSTR1 of 22-23. D, next table, next sub table, which is 4D, which includes supply to SEZ. Again 22-23, all tables here I am saying it is 22-23 transaction, filed, declared and paid in 22-23 only will come in table number 4. Any doubts here? 4A is B2C, 4B is B2B, 4C is export, or anything other than SEZ zero rated supply, and 4D is SEZ. 4E is deemed exports, which includes your export oriented EOU sale, all such things, where you are again paying tax and getting refund, not the LUT thing, as you may be knowing, where we have got refund in our one of our case. Then F is related to advances. Advances, when I say, it is only applicable for service and not for goods. Up to 2017 November 15th, we were having advance both on goods and service, but for the current year, that is for 22-23, it is applicable only on service. If you are a service provider and have received advance, then you are liable to pay tax on that, irrespective of you issuing invoice up to filing the return. So that comes under F. Similarly, you have G. Table G is inward supplies, purchases on which RCM is paid. Say for example, you have availed transportation service, GTA service, goods transport agency service, or you have availed a legal service from a lawyer who has issued you invoice. So that service, that part of your turnover or inward supply will come here, on which you should pay tax, which is paid in GSTR 3B. I am stressing on that. Only those declared in GSTR 1 and 3B will appear in 4. So these tables will automatically be generated by the GST portal based on the returns filed. Even then, we have to verify the correctness and change, as I will explain going forward. We have to change. So we came up to G. H is the subtotal of all this. Then we have I and J, which is credit note and debit note, pertaining to all these transactions except B2C, which is declared in GSTR 1. Then we have other two subtables, which is KL, which is amendments. Either I am increasing my tax liability through amendment or decreasing my tax liability through amendments in GSTR 1. Those details will appear here. So the last two tables are M and N. M is the subtotal of IJKL. N is H minus H plus N, M. So table 4, what comes where, we have discussed. Now I will go to the confusion part. Or we'll just complete table 5 also and then go. Similar to all this, I am not going point wise here because it is all self-explanatory. It is export without payment of tax, SEZ, nil rated, exempt, non-GST, credit notes in such transaction. That's all. Supplies again reduced or declared through amendments. All these are self-explanatory as we discussed now, where we are not paying tax under LUT, or it is not at all payable because it is exempt, nil rated, or the non-GST supply. So 4 is taxable, 5 is exempt or non-GST, or where we are not paying tax. So now I am coming to the confusion. Now I will give you a situation where you have to tell me where these figures will come. My book turnover, if you want to write, you can write down. My book turnover for financial year 22-23 is 500. In GSTR 1 during 22-23, I have filed 450. In GSTR 1 from April 23 to October 2023, I have filed for 50. GSTR 3B, I have filed in 22-23 itself 500. So now all these are B2B transactions. We'll assume all these are B2B transactions. Which table should it appear? And how much is the amount? We will take everyone's opinion here. Navin sir will say. So I am again repeating, total turnover, my actual turnover in my books of account audited is 500. I have declared during the financial year 22-23 450. I have declared during 22-23-24 up to November 50. and GSTR-3B 22-23 only I have correctly declared 500. So now my table 4B, which is B to B, how much should be the value? Should it be 500 or 450 or 50?
I think 50 rupees.
No,
500.
no, all three 500 is wrong. So it is 450. So I am again repeating, all details filled in here are those declared in GSTR-1. This table is entirely filled from GSTR-1 only. So whatever we are declaring in GSTR-1 up to the financial year, in the financial year, that is 22-23 only, will come here
That means it will come from the system itself. We
automatically.
need not meddle.
We need not. We will have to change it if we have something else that we are going to discuss later. Now, table 4 and 5 we are clear. I am stressing upon this because many of us have a confusion that all turnover in table 4 and 5 should match to our books of account. It is not that way. It is books of account. Books of account is the correct figure, I agree. But declaration in GSTR-9 is not based on correct figure. It is as per the following methods. Any transactions of 1 year, say financial year 22-23, which is declared in 22-23, shall be shown in table 4 and 5. Now, table number 10 and 11, as we discussed, if you remember, what was that? Current year transactions we are declaring in the next financial year. Now, what is the time limit that is available for? See, this is very important. Now, I am asking a very tricky question. Everyone knows a date, but it is not that date. I am just confusing everyone here. You also be in the loop. See, what is the timeline up to which I can show my invoices for current year, that is financial year 22-23? Till when can I show my invoices in GSTR-1? Till when?
September 30th.
The earlier date was September 30th. Now it is changed to 30th November. Is it correct? Date wise correct.
Or annual return.
Or annual return, whichever is earlier. Suppose we have not filed. We are up to 30th November only. We are standing on 30th November and not filed GSTR-9. Can I file it today?
November 30th. I think yes.
Yes. That means we are late filers. Does that, am I correct? See, GSTR-1, what is the due date? 11th of next month. So October return, see, when you say it is to be filed within 30th of November, it means 30th November is the last date you can file and not November month's return. It means 30th November is the last date. So I am filing my GSTR-1 within due date, which is October 11th. So now which is the due date? Which is the correct date then? Till when can I file my GSTR-1 invoice of last year? November 11th. So even though the act says it is November 30th, technically or practically speaking, it is November 11th only. Again, if we are delayed filers, then we have time up to November 30th. So this is one confusion. When I go to ITC, similar confusion we will have. We will discuss it there. So now, any transaction that is declared from 1st of April 23 till October month's return, whenever you are filing within 30th November, that should be included in table number 10, which has a increasing effect. I am saying you are increasing your tax liability. That is, you are showing your sales, not your credit note. Showing your sales, having amendment for sales already shown, or issuing debit notes will come under table 10. Financial year 22-23 transactions shown in 23-24. This comes in table number 10. Similarly, we may have issued credit note, or value might have decreased, or something like that have happened where tax liability has decreased. So we are declaring that in table number 11. Correct. So table 4 is current year transaction declared in current year. Table 5 is again similar to that. Table 10 is increase of tax or taxable value for current year done in the next year. Similarly, 11 is decrease of tax liability of current year done in the next year. So table 4, 5, 10, 11. Any confusions? There will be no confusion until I ask questions. So now we have discussed on table number 4, 5, 10 and 11. Now table number 4, whatever taxes we declare should be shown in table number 9, tax payable column. Table number 4, GSTR-1, whatever was my outward liability. Last column will give you total turnover along with respective taxes. Plus you have to add RCM and declare it in table number 9, GST payable, taxes payable. Taxes paid will automatically come from GSTR 3B, which is a non-editable field. Suppose there is a tax payable, you have short paid, that is GSTR 1 you have paid, declared more, but GSTR 3B you have reduced your tax, so there is no tax payment of X amount. Then that tax needs to be paid using DRC 03. So table number 4 tax liability should be paid in GSTR 3B. If it is not paid, now you have to pay along with interest in DRC 03. Form DRC 03 is a form where you voluntarily intimate to the department that I have made a mistake, I am filing it now. So you are using DRC 03 to pay the tax liability ascertained. Now we will discuss the spillover effect of 21-22 in GSTR 9 of 22-23. See, now when we discussed, we said 22-23 transaction are declared in 23-24 up to November. Similarly, 21-22 transaction are we not declaring in GSTR 1 of 22-23? Have we not declared? We might have declared, no? So we had statutorily we had time up to November 22 to declare. So now how are we showing that? Now when I said GSTR 1 whatever we have declared 2022-23 transaction which is correct and declared in GSTR 1 should be declared in GSTR table GSTR 9 table 4 is what we said now. So this GSTR 1 includes details of last year also. So should it include here or should we remove that? The GSTR 9 is for 22-23 now we are filing. So when we are filing for 22-23, is 21-22 figures relevant? No. So should we remove that from table 4? If we remove, will it have a difference between GSTR 1 and GSTR 9? Yes. So how do we go about this? Is there any solution that you guys have? Separately where?
In GSTR-9, a different table.
Which table? There is no table like that. I have given you tables also, no? 4 and 5 is related to outward. 10 and 11 is related to outward. Only 4 tables you have for outward. All 4 we have discussed now. So what is the option available? Anyone with the option available? Okay, I'll give you option or I'll give one statement. You tell me it is correct or wrong. We will reduce it from table 4 and do it and nothing else is required. Whatever is of 22-23 only we will keep into table 4 and all other old information we will remove from table 4. Is this correct? And we will not declare it anywhere. Anyone who says I am correct? Edit. It is editable. I agree. Table 4 is editable. You can fill whatever you want. But what I am saying, this is automatically filled with 21-22 information. Now I am removing 21-22 information and doing nothing else. I am removing 21-22 information and keeping only 22-23 information here. Is that the correct way? No. Yes. No. Majority? No. Only one yes with all other no. But yes is correct. That is one option. See, when will this occur? When GSTR-9 also, GSTR-9 of 21-22 is also filed, and table number 10 of 21-22 is declared with this figure. See, 22-23 what we discussed, 50 rupees in our example, we said we are filing it in the table number 10 because it is filed in the next year. Similarly, last year also 21-22 when we filed, table 10 we would have filled.
Declare in the next financial.
So if that and the difference between 9 and 1 is matching, there should not be any issue. If that is not the case, suppose you are liable for, your turnover is more than 5 crores and you are liable to file GSTR 9C. Then you have one more option. What option do we feel? I will not change anything in GSTR 9. Whatever has come from GSTR 1, we will keep that. GSTR 9C is a reconciliation statement, correct? So GSTR 9 is reconciliation between GSTR 9 and books of account. 9C is a reconciliation between GSTR 9 and your audited books of account. So when you say total turnover is X amount and GSTR 9 is X plus 21-22 transaction, difference you have to give reasons. What is the difference? In the reason column, reconciliation column, you will say that turnover pertains to 21-22. So that is second option available. This is your spillover effect I am saying of 21-22 which you are showing in 22-23. So first option is you will reduce it from table 4 as it is because it is declared in table 10 of last year, or you are keeping it that way even if it is declared in 10 of last year, you are keeping it that way and giving reconciliation in GSTR 9C. You have two options. Second one is very legal option because it is very straightforward. First one, there may be chances where you may have cases from GST department saying turnover difference. So what better you can do? Once you have reduced tax, write a letter to the GST department, whichever is your jurisdictional AO, attach GSTR 9 of 21-22, attach GSTR 9 of 22-23 and say this difference I have not considered in GSTR 9 table 4 of current year because it does not pertain to this year. At least if they are coming up with an explanation, we can follow that explanation for the following years. So that is one option we have. So whenever you are doing this removal from table 4, we suggest you write it to your jurisdictional AO officer, you write and seek their opinion. If they are not responding, it is not our headache. Now we have discussed all relevant fields of GSTR 9 related to outward supply. I will give an example which should solve all your doubts if at all it is there in your mind. For the current year, current turnover, correct turnover as per audited financial statement is 1000. You can write down so that you will have clarity. Correct transaction is 1000, of which GSTR 1 you have filed in 2022-23 is 900. GSTR 1 of 23-24 up to November what you have filed is 80. GSTR 1 of 22-23 includes 100 rupees turnover of 21-22. Now tell me which table how much amount should come. So I am repeating my explanations before these people solve. Table 4 and 5 should be GSTR 1 sales which is declared, GSTR 1 sales which is declared in 22-23. 10 and 11 we have to declare 22-23 transaction declared in 23-24 up to November. Then spillover effect as we discussed. So now in our example, what is that we are getting in table 4? How much should we mention in table 10?
Table 4 and 900 mention, but table 10 and 80 mention.
80. So table 4 we had declared, we should declare 900. Anyone, any other amount? 1000. I'll give you four options: 900, 1000, 100, 920. At the end of the day, which figure are we relying on? It is the books figure. Financial statement, whatever is my sale, is my correct sale, irrespective of what is declared or what is not declared. If there is no declared, not declared, we have to declare it now. That is the major purpose of GSTR-9. We are reconciling our books with monthly returns filed. We are consolidating and correcting whatever mistakes are there. So now, as per our example, my books turnover was 1000. I have declared for 22-23 in GSTR1 during 22-23 is 900. Next year, that is up to November 23, I have declared is 80. Last year, 21-22's transaction of 100 rupees is declared in 22-23 GSTR1. So how much should my table 4 reflect? How much should my table 10 reflect? Is there any effect of DRC3 here? You also answer your questions in your comment box. So we'll come up with the answer. What is the answer as per you?
1000 for table 4.
Table 4, 1000.
And table 10, I'm confused between 80 and 180.
You tell one answer.
80.
80. 1080. Okay. What is yours? It's table 4.
Table 4, 800.
800.
And table 10, 80.
80.
Table 4, 920.
920.
Table 10, 80.
80.
Table 4, 900. Table 10, 80.
980. So major answer here is 980 or 1080. 900. Major is 980. One with 880. Other with 1080. Only one with 920 and 80. So what do you feel? It is 920 and 80. At the end of the day, my table 4 plus my table 10 should be equal to books of account. So after all my discussions here, I am emphasizing on one point, which is books turnover is the correct turnover. That should match to our table 4 plus table 10 of GSTR-9. So correct answer is 900 of current year, which is already declared in GSTR1, plus 20, which is not declared in GSTR1 of current year or next year, on which we have to pay tax. Correct? So 920 is my GSTR1, GSTR9 table 4. 80 is my GSTR9 table 10. So now this 20 rupees, we are adding it in table 4. So similar effect we are giving in table number 9, which is tax payable. Table number 9 of GSTR9, which is tax payable. So when we add this 20, tax on 20 needs to be paid using DRC03 along with interest up to the date of payment. So I feel entire outward related transactions are clear. I am again repeating, books turnover is the final turnover. Table 4 plus table 10 should match your books turnover. If there is a difference, add it in table 4 and pay using DRC03. Table 4 and 9 both. So I feel there is no confusion with related to outward supply. So we can go with input now. Any doubts you can just post it on the comment box. Whatever you have, you can raise it now so that our viewers also can understand. Anyone with any doubts? Up to now, up to
If any differential tax payable is there, can we set off against the existing input rate or we have to pay?
Okay. What sir is asking here is, we have a 20 rupees payable now as per our discussion. We have added it in GSTR 9, table 4 and 9. Now at the time of payment, should it be paid through cash only or can credit ledger be used? That is the question. So as per GST law, there is no restriction on you using the credit ledger for payment of tax. So DRC 03 also allows you to pay it using credit ledger. However, interest should be paid using cash ledger only.
So no set off of existing.
Interest. Tax can be set off against existing credit, but interest needs to be paid using payment only. If it is available in your cash ledger, you can use that. Any other doubts? Anything that is going in, or am I just talking? Very clear?
Yeah.
Okay. So outward supply we have completed here.